Welcome traders to another Tickmill trading update with me, Patrick Manley. Want to update the S&P 500 view using the E-mini futures contract and put together a trade plan for the week ahead, looking at some high probability action areas and some price targets that we can realistically expect to achieve given the current market volatility. So before we jump into the technical picture, as always, we just want to review last week's performance and see where we are with respect to market dynamics, market narrative, and some of the potential catalysts that may be in play as we head into the week. So from last week, measuring from Monday's open to Friday's close, opposite type of price action to the week before, where the early strength in the S&P 500 did create new all-time highs, but finished weaker. Bullish sectors overall dropped from 37.5% to 30.3%. That's S&P 500 weighted, and sectors which were neutral did drop into bearish territory. Bearish moves to 67.8% of the overall from the 15.6. Information tech and consumer discretionary, both of the potential of a bearish pinch as well next into this week. The two sectors to really keep an eye on. Information tech is still inside the multi-week balance with a close around the halfway back of that range. The applied move for the week is plus to minus 4%. So realizing the implied move either way up or down will still keep this multi-week balance view in place for information tech. So nothing really to get too excited about. However, we do have some pretty meaningful earnings coming up and from the Mag 7, and that may have an impact on potential volatility. In terms of the calendar overall, today we get ISM manufacturing PMIs. We will get earnings after the close from Palantir, JOLTS data tomorrow, Tuesday, and earnings from AMD. And then heading into Wednesday, ISM services and earnings from Google and Qualcomm. And then on Thursday, jobless claims, and we will hear from Amazon after the close. And then on Friday, being the first Friday of the month, we will get non-farm payrolls data. So quite a few catalysts there in terms of volatility for us to watch out as we head into this week. We also have Trump headlines over the weekend. We have the Fed chair pick. Walsh has been nominated. It's now up to the Congress and Senate to pass this nomination. So that is likely to act as a tailwind, as he's a known quantity, Walsh, in terms of financial markets. So that he will also have a deregulation stance as well to the finance sector as a general perspective from him, which could also act as a tailwind should his nomination pass. In terms of the headwinds coming out of the weekend, we have Canada-Mexico tariff threat still ongoing, and China tariffs as well, 10 to 20%. And the Greenland framework appears to have been completed, and EU tariffs obviously have been paused. So it's now really about Walsh's getting the nod from the Congress and the Senate, and so we will see how that shakes out. But the real driver, I sense, as we head into the week now, obviously we had that liquidation in terms of the precious metals markets on Friday. Significant shakeout there. They're stabilizing somewhat this morning, but be cognizant of the fact that limit down scenarios still apply to those markets in China. So additional volatility may still be seen this week in the precious metals markets, which will have a bleed over effect into equities as positions have to be squared and investors or funds need to raise capital from other sources. In terms of the internals, so we have 53% of stocks trading over their 20-day moving average. That's down from 57% last week. and stocks trading over their 50-day moving average stays at 66% from the prior week, while stocks trading over their 200-day moving average has dropped to 64% from 66. So net, no real change. Overall breadth is still positive. Um, and we continue to see rotational type action there. So that's keeping a support under the market for now. And in terms of the gamma effect, we are watching the 69-62 areas, the gamma flip this week. So whilst we trade below there, we can continue to see slippy type price action as we saw overnight. However, we have recovered quite meaningfully so far, but need to reclaim that 69-62 handle to see if then we can, the impact of that gamma flip will then lead to more grinding type price action, which ultimately would be supported to the upside. So that's where we are from a gamma perspective. And in terms of the charts and the technical setup as we head into the week, let's see where we are on both the monthly, weekly, and daily VWAPs. So the daily VWAP is bearish below 69.85. The weekly is now bearish below 69.71, and the monthly remains bullish above that. No, sorry, the monthly VWAP is now bearish below 68.94. Obviously, we're trading back above there, but overnight we were below it. So I want to keep an eye on the potential more significant momentum shift here in the markets if we do if we see continued acceptance below those key levels. But for now, markets are attempting to stabilize here. In terms of the structure, we're in a balanced profile on the daily structure, 70.31 to 68.98. So we would need to take out 68.98 during the cash session to see that shift to one time framing down. Weekly structure is also balanced, so 68.22 to 70.31 there to maintain a balanced profile. And the monthly structure is still one time framing higher, above 68.22. So key that we defend, or that the defense we're seeing of the lower end of the range is being maintained at the moment, which with the balanced profiles, what we're looking to do is fade the edges to play for tests of the value areas. So that said, as we start the week, our bull bear zone from early this morning was the 68.69, 68.59. 68.59 is an equality objective versus this swing structure we have in place, and the 7,002 level gave us that equality objective, came just shy of there this morning. But we saw some decent divergence in terms of the intraday deltas, and so that has encouraged long positions, and we're now trading up. Let's just have a look in terms of where we sit in terms of the monthly profile, so January's profile. So the value area low there, 69.36. Key that we get acceptance above there for further upside moves, and we have last week's value area low coming in at 69.55. So again, that's going to be a key test area here as bulls try to re-establish a bid in the market. But in terms of the volume point of control now, for January is up at the 69.90, and in terms of last week, it sits at 70.14 to the upside. So we've had a decent reaction here. What I've been watching for now are equality objectives in terms of the scope and scale of corrective moves. So if we look at that last meaningful bounce that we saw on Thursday, that would actually take us up right into this high volume node. So the 69.70, 69.60 area. So what I'd anticipate is that if we continue to find support here at the overnight volume point of controls above the 69.10 area, then let's just draw in a new pattern here. So we would look to test into the highs, back up into the volume point of control at the 69.90, just below the 7,000 level, and then likely see some consolidation ahead of these earnings. But as long as we maintain support there back into the 69.20 area, then we could see a move higher to test last week's value area high, which comes in at 70.15. And if we can get through there, then we have all-time highs at 70.43, and the weekly expected move up to 70.70 would be the ultimate objective. Obviously, we would need those tailwinds to be in place with positive earnings coming out of the Mag 7 components this week, and we would also need the jobs data to keep things comfortable for market participants, and no surprises or no material surprises from that jobs data. Circa 50k is the number that we're looking for there. So as long as that all stays in place, any near-term volatility should find support once we can get back through this high volume node in the 69.60, 69.50 area is the first key hurdle. To accept above there, then pullbacks, like I say, supported to target prior all-time highs, and then on to the weekly anticipated range resistance. If we retest this week's the lows so far and we don't find support through that 68.50, then we'll be anticipating a test of the 68.13. Then as the weekly bull bear zone acts as resistance, bears would then be targeting a test back down into 67.70, that being December's monthly range lows. And once again, from there, we'll see if buyers step back in to rotate back in to test that bull bear zone from below. So that's the setup as we head into the week. Updates provided daily. And as always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.